Good afternoon, everyone. This is Karan Dillon with the Contractors Coach, and I'm glad you guys could join us. And so we're going to get started here. And what we're going to be talking about here is obviously, given the environment that we're in now, how to manage your construction business over the next 90 days. Okay. Obviously, some people who are contractors have either had to stop their businesses. Some people have had to deal with shelter-in-place orders that has affected or has slowed down their businesses. And obviously, there are some people who can do business as normal, but their clients are definitely concerned about this environment. So people are at different stages with their business or affected in different ways. So the purpose of this for us was to go over three specific things. So I'm going to go into what that is. And the three things that we're going to be covering in this meeting specifically are, number one is the CARES Act, right? We're all hearing about what the CARES Act is. We're all hearing different aspects of it, and everybody has their own translation of what the CARES Act means. There's different parts of it, which ones apply to you, which ones don't. So the majority of what I want to cover today is actually going over what is in this law. So I spent a couple of days, going through this fun project of actually reading the CARES Act to find out what is in it. And what I've done then is I've pulled out certain parts of it so that those are the parts that apply to businesses, especially the businesses that you guys run. And what I've tried to do is not try to insert my translation or my interpretation of it. What I'm going to share with you is what is the actual language of the law, so that as you're talking to either the banks that you're going to be talking to going forward, whether you're talking to your accountant, your lawyer, or your buddy or your neighbor, whatever it is, people will have their own version of it, and that's fine. But what I want to share with you is what does that law say? What is the actual language, right? Then you can understand it the way you are, and especially if you're talking to banks after this, if they come up with their own version of it, at least you have some knowledge to push back if you need to. Okay, that's going to be the majority of what I want to cover today. The second thing that I'm going to go into is then how do we take what we are, either the CARES Act as well as the other strategies that we've talked about, and manage cash flow. Because even in normal times for any business, cash flow is the most important thing, right? Cash flow is the blood supply of any business. Now more than ever, that becomes vital and critical. So how should you manage cash flow, especially using the CARES Act? So we're going to talk about that towards the end. And then finally, being prepared for the business environment after the shelter-in-place rules are relaxed or completely lifted, okay? Because this situation will change. And so we have to be prepared for what that is. But let's get into what the first thing that I wanted to talk about was, which is the CARES Act. So the CARES Act has a whole bunch of information in it. It is over 800 pages long. I went through almost all of it. And really, the first two parts of it apply to the businesses that we deal with and you guys have as contractors. Okay, so these are the six parts that are six sections that I saw that apply. So Title 1, which is it's called Keeping American Workers Paid and Employed Act. That's what it's called. It's got three sections. 1102 is the Paycheck Protection Program, and that's the one that we hear about all the time. Okay. 1106 is the loan forgiveness. So the interesting part is that the Paycheck Protection Program determines how much loan you can take out. The assumption people have that is that if I take out the loan under this, then that loan will be forgiven. But the rules for forgiving the loan are very different than the rules for giving you the loan. So what that actually means is you can take out a loan and not all of that will be forgiven, if the criteria are not met. So that's what this section talks about. The third one, 1110, is the emergency EIDL grant, and EIDL stands for Economic Injury Disaster Relief. grants. That's the $10,000 that we keep hearing about. And so I'll go into what that is as well. Okay, so that's the first one that applies mainly to businesses. The second one is the Assist Title II. That's assistance for American workers, families, and businesses. Okay. This one has information about the unemployment assistance that mainly applies to employees. The rebate provisions. This is something we've heard about on TV as well, like the $1,200, etc. And then something else, which is this called subtitle A, B, and C. C is about employee retention credit, and this is for companies that have seen significant reduction in their revenue, right? So these were the sections that I found that actually applied to the situations that we're dealing with. And so let's get into what these are. And like I said, this is the actual language of the law, and not somebody's translation of it. Okay, so the first one, section 1102, that's the Paycheck Protection Program. So the first thing to understand is that it covers a period of February 15th through June 30th, 2020. And so only within this period this is going to be applied. What does it cover? And this is the specific language from, like I said, the rules itself. It covers, I'm just going to read them real quick. Salary, wage commissions, or similar compensation. So basically things that you pay out more or less as a wage. Payment of cash, tip, or equivalent. I'm guessing that really applies for restaurants. But if you've paid cash tips to your employees, I think that can be covered. Payment for vacation, parental, family, medical, or sick leave. Allowance for dismissal or separation. So I think if you have to let somebody go during this period, that you actually have this Paycheck Protection Program, and you have to pay them some money, that might be included as well. Payment required for provisions of group healthcare benefits, including insurance premiums. Okay, so that is covered as part of it. Payment of any retirement benefit. So if if there's like a 401k deduction that you have, that's going to be covered. Payment of state or local taxes assessed on the compensation of employees. So that's covered. And then, there's a bunch of exclusions in there, but the most noteworthy exclusion I found was that when you're starting to calculate wages, the compensation of an individual employee can only be included up to $100,000 prorated for this period. So the point is, if somebody is getting more than $100,000 annually, which means their monthly prorated amount will be higher than 8,300. I think that's where it comes down to 8,300. Then you can only include that 8,300 as part of this Paycheck Protection Program. So the point being is, you cannot, as a business owner, give yourself a raise retroactively and then have that be part of this Paycheck Protection Program. So this shall include only wages up to 100,000. I think that's the whole point of this. So that's what the actual language says. Okay. Then it goes into that this will also include people who are sole proprietors, independent contractors, and self-employed individuals. Because I actually know we have some clients, despite our best advice, still have not incorporated. So fortunately for you, you are still covered, but obviously you'll have to provide some documentation. Okay, and they've listed out some documentation that you're going to provide. Payroll tax filings, I'm guessing that's for the previous year, forms 1099, and then an actual income and income and expense. So this is your profit and loss statement for your sole proprietorship. Okay, this little phrase at the end, which says as determined by the administrator and the secretary. Now, obviously, this is a federal rule. The administrator here is the SBA, and the secretary, what they refer to is the Secretary of State. So the point I'm making is that states can actually have their own little additions if they feel like it. Okay, so let's hope that doesn't happen. But that's really where we are here. Now, as far as this Paycheck Protection Program, one thing that I did have noticed, and I'll sort of bring this up here, is that nobody's actually seen, most people have not seen the forms to fill out. I know Bank of America has said that they're going to, they're ready to accept these, but most other banks have not. And the information that I read was that banks are still negotiating with the SBA over this. My bank that I bank with, Wells Fargo, basically they have nothing on this yet. And the only information that I've received is that they think, or they hope, that by the end of this week, this will get sorted out and banks will actually start processing applications for this loan. I know last week some people were thinking, they're like, hey, I'm already going to start applying for it. But I don't believe the forms have even been finalized by the SBA yet for this loan. So, this is specifically the Paycheck Protection Program. So that's why we've got to be careful that we actually use a form that the SBA will, or the bank will actually accept. There's no point in going through the exercise only to find out that what you've done is a complete waste of time. Okay. And individual banks will be rolling out their own version of this form. I'm assuming it's going to be a standardized form issued by the SBA, but individual banks will obviously have their own additions to this. And one thing also here I will say is that nothing stops a bank from adding their own additional requirements to this. Okay, so that is something you have to be very mindful of, and that also is in part why we're doing this, because what we want to do is communicate to you what the actual law says, and then if your bank comes up with some more, I guess, anal retentive issues, then at least you can push back and say, look, this is what the law says, and maybe what you're asking us to do is unreasonable. Okay, so it helps to actually be educated on this. That's the whole point of this. Okay, so this is section 1102, which is really what everyone's talking about, which is the Paycheck Protection Program. Now, the maximum loan amount. So when you apply for this loan, the bank is going to then decide, or determine, I should say, how much loan they're going to give you. And this is what the language is. That says that during the covered period, with respect to the loan, the maximum loan amount shall be lesser of the sum of the product obtained by multiplying. So here's the key language. Average total monthly payments by the applicant for payroll costs incurred during the 1-year period before the date on which the loan is made. So that's the key part of the language, that when you're applying for this loan, let's just assume the bank's going to give you the loan on the 1st of May, then they can go back for 12 months prior to that date and see what is your average total monthly payments for your payroll costs, and then they will multiply that number by 2.5, and that will be the maximum amount of the loan that they will authorize for that business. Okay, that's what the language is in the law. Now, there are some other issues. Let's say you were not in business last year. I think they're gonna look at if you were in business. This is another date that pops up, February 15th, 2019 to June 30th. And this actually might be a typo, because this is something that, well, they're gonna look at if you were in business or not last year. And if you were not, if you were a newer business, if you incorporated your business more recently, what they're going to do is they're going to take a look at the period between January 1, 2020 and February 29, 2020. And they're going to take a look at your payroll costs between that period. And they're going to take that as for figuring out your average monthly payroll cost. And then they're going to take that number and multiply it by 2.5. Okay, so those are the two periods they're going to look at, either 12 months prior to the loan or the first 2 months of this year. Now here's the other key thing, which is what are the allowable uses of covered loans? Obviously this comes into play when you're going to go and apply for loan forgiveness. So the allowable uses are, number one is payroll costs, as we have already talked about, costs related to health insurance, paying employee salaries, commissions, or similar compensation. So I'm guessing number one, payroll costs is actually if you have a payroll service provider. So any payments to them are covered as well. Number four, payments of interest on any mortgage obligation. So if as a business you have an office building that you've purchased and you're paying a mortgage on that, any interest is going to be covered under this loan as well. And then they say specifically, shall not include any prepayment or payment of principal on that mortgage. So you basically can prepay your loan, and I think they're not even covering the payment of principal. Okay. Rent. So if you actually rent your office, then that rent is covered under this. And payment for utilities. So, electricity, this, that is going to be covered. I'm assuming internet is a utility as well. And then interest on any other debt obligation that were incurred before the covered period. And the covered period obviously starts from February 15th. So now this is an interesting and vague sentence. I was not really sure what to make of it, but I guess what they're saying is if the business has a loan, the interest on that loan is going to be covered under this Paycheck Protection Program. I guess the banks are trying to protect themselves as much as possible, right? So that's what this is. Okay, so that was the Paycheck Protection Program. And by the way, just I'll insert in here what we've muted everybody. Clearly, we have a lot of people on here. The other thing we're going to do is we're obviously going to record. We are recording this, but we're not going to be taking questions during this this meeting, because each one of you has a different situation, and us trying to sort out everybody's situation on this call is going to be impossible. So if you do have questions, here's what I would say: please write them down as they come up for you. And then the best thing is email your coach their questions. If you're working with me or Tom or Marisa, send that in an email. The best place to handle those is going to be during your coaching session. Okay, so that's what I would say. That's why we muted everybody, just for our own sanity, as well as it's going to be impossible to handle all questions, all types of questions over here. And obviously we will respond to any emails you send us for sure. Okay. So let's move on to the next section, which is 1106, which now covers loan forgiveness. Now, what it says is the covered period for the loans is the 8-week period beginning on the date of the origination of a covered loan. So from the date your loan starts, you have 8 weeks that this is going to cover. Forgiveness. An eligible recipient shall be eligible for forgiveness of indebtedness on a covered loan in the amount equal to the sum of the following costs incurred and payments made during the covered period. So number one, payroll costs. I think we've already covered that. Any payment of interest on any covered mortgage obligation. So if your business has a mortgage, then that interest part is going to be covered. Any payment on any covered rent obligation. And then any covered utility payment. Now, the interesting thing is these are the only 4 things in the forgiveness part of it. So the point I'm trying to make is that I believe businesses will be able to take on more loans than they are eligible in terms of the forgiveness of it. I hope that made sense, right? That not everything you take out under this loan will be forgiven. I think that's something that you have to keep in mind when you go for this. But the point is, if anything that you spend in terms of these 4 things is going to be forgiven. And yeah, one other thing I'll add to this is that regardless of the amount of the loan, 75% of the spend of that loan amount has to be on payroll costs. I think that's also a number that you have to keep in mind. So whatever loan amount you take, if you take 100,000, at least $75,000 of that has to be spent on payroll. Yeah, that's the other rule that they've actually instituted. Now, what was the whole point here? Loan forgiveness. So there's 2 criteria they're going to use for loan forgiveness. One is number of employees, and the other one is the actual dollar amount of payroll. So this is the page that talks about number of employees. And it's a little bit of, I guess you can call it gibberish, but I'm going to try to translate it the best I can. So here's what they said. So the loan amount forgiveness under this section shall be reduced by the quotient. So you basically, quotient is what you get when you divide 2 numbers, okay? By dividing the average number of full-time equivalent employees per month employed by the eligible recipient during the covered period. I think that is the covered period of the loan, by And this is, it says at the election of the borrower, you can choose which time period you want to be applied here. The first option is the average number of full-time equivalent employees per month employed by the eligible recipient during the period beginning February 15, 2019 or ending on June 30th, 2019, or the average number of full-time equivalent employees per month, beginning January 1, 2020 and ending on February 29, 2020. So basically what they're going to say is that during the period of the loan, we're going to determine how many, they call them full-time equivalent employees, how many full-time equivalent employees you had. So let's say you had 10 of them, okay? Then they are going to compare that with the employees you had at a different time. And so these are the two options they've given you. And so if you had 10 employees, between, let's say you're a new business between January 1 and February 29, even if you've laid them all off right now, okay? If you rehire those 10 people during the time period of this loan, they will consider that you actually had 10 employees all along, and then the payroll for all of those employees will be part of the loan forgiveness. Okay, I know this is a little confusing, but hopefully I try to explain it as simply as I can. Because like I said, the criteria for giving the loan and forgiving the loan are different. Okay, so you got to be sort of careful about that. Now, this was another little convoluted sentence that I found, so I put this out there. It says reduction relating to salary and wages. And so here's the language. It says, in general, the amount of loan forgiveness under this section shall be reduced by the amount of any reduction in total salary or wages of any employee described in subparagraph B, I guess is the previous one, during the covered period, that is in excess of 25% of the total salary or wages of the employee during the most recent full quarter during which the employee was employed before the covered period. Okay, so what does that mean? So here's my translation of it, and obviously I'm not a lawyer, but I'm just going to give you my opinion here. It seems like what they're saying is that if the dollar amount that you paid an employee, let's say in Q4 of 2019, let's say that's what they're using to compare, and you compare that to the dollar amount that you pay that employee during this loan period, they will only reduce the loan forgiveness if the reduction in salary is more than 25% compared to, let's say, Q4 of last year. That's how I read this, which means they are allowing for some flexibility of reduction in wages, given that, even when this is over, people are going to come into a little bit of a difficult business environment. So that's how I read this. So that's why I gave you this. What we will also do, by the way, after this is share the actual text of the law. And so if anybody's like really curious to read a whole bunch of other gibberish that's in there, you'll be more than welcome to go and read it. And this will help you to understand where to go look, right? If you're interested in this, you look at Title 1, Section 1106, number 3. Okay, so then you can go read and then try to understand it for yourself. But that's how I understand this. So what they're trying to do is give employers some flexibility if they have to reduce wages of employees, during the loan amount. So that's kind of my translation of it. Okay, so that's the first two things, which is the Paycheck Protection Program loan and the Paycheck Protection Program loan forgiveness, right? Those are the two main things. And again, I'll just emphasize that those loans, even though they've been authorized by the federal government, have not started being paid. I have not known of a single company who has had that money deposited in their account. Most of the banks that work with SBA don't even have the finalized forms yet because they don't know which documentation they're going to ask. So the only thing to do at this point is to either talk to the bank, your bank, especially if they do work with the SBA, or if you're talking to somebody else who does work with SBA for loans, they can tell you when your business can apply for this. Because obviously you are going to be a little bit tied to the banking relationship that you have. All right, now this one, the Section 1110 emergency I think this is the Economic Injury Disaster Loan Grants. Now, this is one that you can apply directly with the SBA, right? You don't have to go through a bank or anything for this. So I'll go through it quickly, and then I'll tell you the information I have on this as far as I know. So it says the covered period for this is January 31st to December 31, and the term eligible entity means any business with less than 500 employees, any individual who operates as a sole proprietor, with or without employees, or as an independent contractor. Okay. Now, what they say is that they've relaxed some rules on how or who can get this grant. They could simply look at your credit score and decide to give you this grant based on that criteria. Or they say you can use alternative methods to approve this grant. Okay, so it's kind of vague how they're leaving this essentially up to, I guess, the local entities. Now, the amount of advance provided under this shall be more than $10,000. Now, here is something that I read a little interview by, I think he's like the director of the SBA, and here's what he said. I'll tell you what I heard. So what I heard was that anybody who applies for this will be eligible to get $10,000 as an advance or a grant. And the language that I heard from the FBI director, the SBA director was not that at all. What they're trying to do is they're trying to get as many businesses as possible to get this loan. And I think the maximum amount authorized for this specific part is I think $10 billion. That's what it says. So what that would mean is, like, a million businesses get 10,000 and then you're done. But that's not how they are translating it. What they're saying is that, and this is simply in an interview, so I don't know if it's a rule yet or not, but here's what he said, that we're going to take a look at how many employees a business has. And what he said is, if you have 10 or more employees, you will get $10,000. If you have less than that, then you will get the loan based on your employees. So I'm like, what does that mean? So if you're a sole prop, does that mean you're going to get $1,000? And if you have 2 employees, does that mean you get $2,000? That's what it seemed like he was saying. And that would make sense. They're trying to stretch out this 10 billion that's been assigned for this into as many businesses as possible. And I think their thinking is that it's better to give more businesses some money versus just some businesses the entire 10,000. Okay, so like I said, this is more of me reading information on just public news sites. Specifically, the rule has to be clarified by the SBA, and I did think he mentioned that by this Friday they would do it. Okay, so this one, if you haven't already done so, I would recommend you go to the SBA site. You can do it just online. It's pretty straightforward. Okay. The use of funds, they say that usually using these for these purposes, paying sick leave to employees who actually have been affected by COVID-19, maintaining payroll to retain employees, meeting increased costs because of materials unavailable, or basically if you've got to pay more for anything through your supply chain, making rent, and repaying any obligations that cannot be met due to revenue shortfalls, which seems like a rather vague and sort of a catch-all sentence. Okay, and with this, they're trying to be as flexible as possible as to what this can be used for. Okay, so that's kind of what that is the side that covers mainly what businesses can do. Okay, so it's those 3 parts, which is the payroll protection program, loan forgiveness, as well as the EIDL emergency loans. So hopefully I've clarified some of the misconceptions that are out there, but obviously there's a lot more information about this, and a lot more questions that can apply to your specific business. And that's what I said. The best thing is, use this information. You can actually go, we will share the actual document of the law and read through that if that's any section that's of interest, and then talk with either me, Marisa, or Tom. We can definitely help you apply this to your specific business. Okay. All right, so the Title II, now this is assistance for workers, families, and businesses. And this now applies more to the employees of a company. Subtitle A, the unemployment insurance provision. So what they've done is they've extended unemployment, how long someone can stay on unemployment, right? They've extended it for 39 weeks. And if I'm not wrong, that's pretty much the rest of this year. I think that's what that covers, okay? So that was the main. There's like a bunch of stuff in there, but that is what I found was like the main update that they've done for unemployment. Rebates. So this is something that I think is what you hear on TV and the news the most, which is $1,200 per individual. This specifically applies to the status on how you file your taxes. If you file as as an individual, it's 1,200. If you're filing a joint return, is 2,400, and then it's I think it's $500 for each kid. And apparently they have a law that defines what a child is. Okay, so that type of child. So subtitle B, rebates, what it says is that these are limited by income. So if you are a single and if you have an income of $75,000 or less, you get the entire 1,200, and then they reduce it by 5% as your income goes up. And so basically that's like they reduce it by $50 per thousand. So for that 1,200, I mean, if you add 24,000, then you lose the entire 1,200. And so basically, if you are making $99,000 as an individual tax filer, you don't get anything. And it's the same thing with the head of household. If you're making 112,500, you get 1,200 bucks. But if you add another 24,000 in your income there, then you get nothing. And then in case of a joint return, it's 150,000, you get 2,400. And then I think there you'll add 48,000. And if you make about 198, then you get nothing, right? So that's kind of the range there. So you can take a look at your income and your employees' incomes and see where they are to determine how much of that $1,200 you will get. And again, there's a lot of questions around this, and none of this money that, as far as I'm aware of, has been deposited either. So at some point this is going to come, but no one's seen any of this yet. Okay. There's some information here about the 401k plans. Okay, there's a bunch of stuff in there, but in general, what I found was that from a 401k, you can withdraw up to $100,000 without getting the early withdrawal penalty. Okay, but now keep in mind this $100,000 is going to be treated as income. Okay, now which year is it going to be treated as income? I wasn't clear reading on this. I've read or have heard it, so you can spread it out over 3 years. Only if you pay it back over 3 years. There's like a bunch of convoluted things. So, like I said, I'm not a tax attorney, but those are the guys that will explain this better to you. But that's definitely an option. If you have 100K or more in your 401K, you can take that out. It will be considered income. There's a way to not get taxed on it if you pay it back over a certain period of time. And I think that was like 3 years. So a CPA is way better at giving you the exact specifics about it. Okay. Subtitle C, which is the ERC or Employee Retention Credit. This is for businesses that have seen a significant decline in their revenue. Maybe it's a restaurant, or maybe you're a hair salon or something like that, where you've been completely shut down and you don't know when you're going to come back to business or have business. Even some contractors, especially in the Bay Area, have seen this. So what they said is that in case of an eligible employer, they shall be allowed as a credit against applicable employment taxes for each calendar quarter, an amount equal to 50% of the qualified wages with respect to each employee of such employer for such calendar quarter. Now, what that actually means is that if in this quarter, let's say we're in Q2, your revenue is 50% or less than Q2 of last year, then you are eligible for getting this credit. Okay. Now, the amount of wages, you cannot include more than $10,000 in this quarter per employee. That's what it says to get this credit. Okay. Now, specifically, actually, let me clarify. So the part A here says that the maximum you can be given in terms of credit is 50% of the employment taxes. Okay, that's why I said these things are like word salads here. So whatever employment taxes you've paid, the credit will be 50% of that. The maximum amount of wage you can include is $10,000 per quarter. Okay. Now, what I was saying earlier is this part of it, which says the way they will determine whether you're eligible for this or not is they will take a look at your revenue. Let's say it's Q2 of this year. And if your revenue is 50% or less compared to Q2 of last year, then you're eligible. And then your eligibility will stop when your revenue exceeds 80% compared to your revenue of a quarter for last year. Okay, so like I said, it's a little complicated, but this is the specific language of the law. So if you have massive loss of revenue and it's 50% or less compared to the similar quarter last year, you are eligible. Okay, and once it exceeds 80% compared to the same quarter last year, then this credit stops. Okay, again, these are like tax rule changes, so CPAs or accountants are the best to really give you the specific details of this. Okay, so yeah, so as far as the language of the law is concerned, these are the things that I was able to read. Like I said, I read about 250 pages of this. These are the things that I was able to pick out. Not to say that this is everything and anything that is possibly applicable to a business, but these are the things that I found that we should be paying most attention to. So then the question is, as a business or specifically as a contractor, what should you do and how should you use this information to manage your business going forward, especially over the next 90 days, where I believe is going to be the biggest impact. Because hopefully after that time period, which is April, May, June, especially if they find a way to fix this thing, the impact should be a lot less severe than where we are. Hopefully things even get back to normal. Okay, but we shall see. So the three key things I think that are the most important going forward, obviously, is managing cash flow. Use the CARE Act, stay on top of this, and try to see how much money you can qualify for, so you can manage your cash flow in the short term. Okay. The assumption is that sometime in the month of April, this money will start to become available. Okay, that's the assumption from everybody. Now it is the government, and we know how that works, so you don't know. But that is the operating assumption, even within the banks themselves, that this month, sometime, maybe towards the end of it, is when the money is going to start to become actually available in people's bank accounts. Okay, so if you have laid off all your employees at this point and put them on unemployment, that's understandable. What we are advising everybody is, if you either furloughed them or you laid them off, let them apply for unemployment. That's fine, especially if you're in the Bay Area and basically you've been asked to stop work completely. Right? There are some some counties where you have to. If you're not part of such counties, I definitely would recommend you retain employees, because regardless of what the situation is, as a business owner, the actions that you take have consequences. So what you want to do is you want to make sure that regardless of what's going on, you retain good employees. Okay, because good employees are hard to come by. When you find good ones, you keep them and you treat them well. Okay, so that's definitely what I would recommend. And stay in touch with your employees. Just like we've talked about, I'm sure you've heard during your coaching sessions, that this is a time as a business owner for you to be highly active, which is stay in touch with your clients, even those that have signed projects with you. Stay in touch with prospects, even if they are hesitant about going forward right now, it doesn't matter. If you can come across as calm, cool, and collected during this time, they definitely will take note. Okay, and when things do turn around, you may be the first one they call. It's the same thing with employees. Okay, it's your job to be the leader of your business, your family, and basically in any team that you're part of right now, and make sure you're in touch with them and letting them know that, yes, this is a temporary situation and you will do what's in their best interest as much as you can. Okay, and now is the time to increase your marketing. Okay, as much as your cash flow can afford it. Why? Because anybody that has slowed down, their attention, other than watching, the nonsense on TV, they have spare attention. That's what I'm trying to say. And this is the time to get in front of people that you should be talking to anyways. Okay, this actually is a great opportunity for businesses to start to increase their public profiles, getting the information out there to people who are their prospective clients about what you do, and simply the fact that you exist, and this is the type of information, this is the type of work you do. Okay. um, and there are people out there who are trying to, hunker down, ride this out. But when this does turn around, those are the people that will be caught flat-footed. Okay, you don't want to be one of those people. You want to be fully ready to go, basically chomping at the bit, and be ahead of this whole thing once this starts to normalize. Okay, that's what I would say. And then be prepared, and be prepared for the end of this, because this is going to end. This is not a permanent situation, regardless of what the news media will tell you. Okay, sooner or later, hopefully sooner, this thing is going to turn around. But during this process, the most important thing you can do as a business owner is manage your own mindset. We all know the challenge is there. Your mindset obviously drives your actions and your behavior, which determines the type of results you're going to get going forward. And so we've talked about, the results and the types of actions that you're talking about, but those are effects, right? What you have to do is get very focused on the cause, which is make sure that you are maintaining the strength of mind where you are keeping your leadership role in your business and even for your family at this point. Because when this does turn around, the people that are prepared and that get ahead of the curve here will need to get focused on employee acquisition. Because if you are ahead of the game and you get a lot of projects, guess what? You're going to need more people. Yes, the most important thing, like I said earlier, is make sure you retain your employees. Okay, and then the interesting thing here is that if you look about let's say 30 days ago, it was almost an employee market. If you want to take a look at that, as a contractor, you were hard pressed to find employees. Okay? That was the number one complaint or concern most contractors had, I should say. And then overnight, this became an employer's market where, there's a high level of unemployment in all sectors. And therefore, when this turns around, if you're the one ahead of the game, you've been doing your marketing, you can start to handle the sales, you will then need to get into an employee acquisition mode. Okay. And now you actually have the opportunity to acquire good employees. It'll be a short-term opportunity, but if you're on top of it, you will win that game. Okay. And then finally, obviously, focus on sales. This is the time to really, like I said, stay in touch with prospects. And when things open up or things start to normalize, hit the sales process hard, because that's how you can grow your company very, very quickly, way ahead of anybody else. Okay. So basically, this is what I wanted to cover with you guys today. Like I said, we're not taking any questions because it is everybody's situation is different, and it's impossible to do that since we have almost like 25, 30 people online here. It's impossible to do that for everybody here. And I'm sure you have questions around the different aspects of the law as well. So myself, Marisa, Tom, we're all here to answer questions for you. Best is if you've written them down before giving us a call. Email us so we're actually prepared. We know what you're interested in, and then be prepared to handle this during your coaching sessions. All right. So hopefully this has been useful for you guys. That's what I wanted to cover. And like I said, stay strong mentally, because that is where everything comes from. And if you do, just like we saw in 2008, you can come out ahead, way ahead of everybody else.